Oil prices are expected to stay at present levels this year barring a significant geopolitical upheaval in the Middle East, economists say, because OPEC Plus producers have ample spare capacity and supply and demand outlooks are mostly balanced. Brent oil prices briefly rose above $80 per barrel at the end of last week due to attacks on commercial shipping in the Red Sea by the Houthis, who are backed by Iran, and in response to US-UK strikes on military targets in Yemen. However, prices rapidly fell back to approximately $78 per barrel in Asian trade early on Monday. The Middle East developments and the possibility of a significant disruption to the oil supply from the region that produces and exports the most oil are still on the minds of investors. However, analysts note that the supply and demand situation for oil appears to be somewhat balanced this quarter or perhaps in excess. They predict that a spike in demand in the second and third quarters would tighten the market and possibly drive up prices. A lot will depend on the supply strategies of OPEC+. Further production reductions for the first quarter of 2024 have been announced by the alliance. If the group decides to reverse those cuts, in whole or in part, after March, supply should more than be able to keep up with the growth in demand, especially since non-OPEC+ producers' oil production, led by the United States, Brazil, and Canada, is also predicted to keep rising. The Middle East's geopolitical risks could cause extreme market tightness and some disruptions to oil shipments, but OPEC+ producers currently have enough spare capacity to potentially overcome such risks. According to experts like Goldman Sachs, a significant disruption to oil flows in the Strait of Hormuz, through which 20% of the world's daily oil supply passes, is unlikely to occur for the time being. ING analysts Warren Patterson and Eva Manthe stated in a note on Friday that while they believe the risk of significant disruption to oil flows from the Persian Gulf is low at this time, it is certainly worth keeping an eye on, given the potential impact it could have on oil supply and prices. Data from the International Energy Agency, IEA, and the World Bank show that as of November 2023, the OPEC+ coalition retained 5.1 million barrels per day, BPD, of spare oil production capacity, or roughly 5% of global demand. The market is somewhat reassured by this spare capacity, which is far more than it was at the end of 2022 and suggests that OPEC+ may increase production if necessary. The U.S. Energy Information Administration forecasts that the average price of Brent crude oil was $83 per barrel last year, compared to $101 per barrel in 2022. After rounding, there was a $19 per barrel difference. The EIA projects that the price of Brent crude oil will average $82 per barrel in 2024, roughly the same as in 2023, and then drop to $79 per barrel in 2025, when we expect production growth will slightly outpace demand growth, allowing inventories to build modestly and placing some downward pressure on crude oil prices. This prediction was made in its most recent monthly short-term energy outlook, STEO, released last week. Naturally, the administration pointed out that recent events in the Middle East increase the possibility of supply disruptions throughout the projection period, which might lead to higher and more erratic prices. The EIA projects that oil demand would rise again in 2024 and 2025, albeit more slowly than in 2023. Current predictions indicate that the market will remain fairly in balance over the near to medium term, even if supply growth is expected to slow down relative to last year. The demand for oil and economic growth in the US and China, two of the world's largest economies, will also affect the direction of oil prices. This is because a reduction in US interest rates in 2024 may or may not have the desired effect on market mood and consumption. Overall, analysts say that oil prices are unlikely to reach $100 per barrel in 2024, barring a significant geopolitical escalation that results in a significant supply disruption, which cannot be discounted. This is because US oil production and exports are increasing faster and higher than anticipated, and market sentiment regarding demand is negative, particularly for the first half of 2024. According to vessel tracking data tracked by Bloomberg on Tuesday, Russia increased its crude oil exports in late December and early January, and all of its cargoes headed for Asia continue to sail through the Suez Canal/Red Sea route from its western ports. According to data provided by Bloomberg's Julian Lee, Russia's average daily exports of crude oil were 3.43 million barrels per day, BPD, in the 4 weeks leading up to January 14. This represents an increase of 94,000 BPD over the 4 weeks leading up to January 7. Russia's seaborne crude exports increased by 166,000 barrels per day in the week ending January 14, 2024, to 3.45 million barrels per day. This is less than the levels from May and June 2023, when Russia promised to reduce output in the first quarter of 2024. However, according to data collated by Bloomberg, The export level in the most recent reporting week ending on January 14 was still less than half of the 500,000 BPD drop that Russia had promised for this quarter. According to Bloomberg data released last week, Russia's average crude oil shipments in the week leading up to January 7 were 3.28 million BPD, or precisely 300,000 BPD less than the reported exports by sea in May and June, which serve as benchmarks for the country's pledged 300,000 BPD cut in crude exports. Russia announced that it would expand the export cut to 500,000 BPD in the first quarter of 2024 during the most recent OPEC Plus meeting, which took place at the end of November. The reference export levels for the decrease would be May and June 2023. This quarter's drop will be made up of 200,000 BPD of refined products and 300,000 BPD of crude exports. According to Bloomberg data, all petroleum cargoes loaded at Russian ports in the Baltic and Black Seas continue their voyage via the Suez Canal/Red Sea route to Asia, which is currently Russia's biggest export destination. Russian shipments are thought to be rather safe in the Red Sea, barring an unintentional tanker strike. The Houthis are targeting tankers and container ships operated by the West. It's also important to keep in mind that, according to Bloomberg estimates, 16 cargoes holding more than 11 million barrels of Sokol crude are still stranded aboard tankers at sea, suggesting that Moscow may still be having difficulty finding a buyer for its oil. Due to forecasts of excess supply, Citi stated in a note that it revised down its prior forecast by $1 per barrel and predicted that Brent crude oil prices will average $74 per barrel this year. The bank's researchers also reduced their Brent prediction for 2025 by $10 per barrel, with the result that the global benchmark will only average $60 per barrel in 2025. In a note obtained by Reuters, Citi's analysts stated, "We believe softer market fundamentals, absent major supply disruptions, will result in OPEC Plus rolling over its Q1 2024 production cuts throughout the whole 2024 and starting to taper them only in H2 2025. Brent prices are forecast to remain over $70 a barrel this year due to OPEC supply control, as the cartel and its allies in the OPEC Plus alliance are anticipated to maintain a finely balanced market, according to Citi. However, the analysts cautioned that the escalating hostilities in the Gulf of Oman and the Red Sea would cause an immediate increase in the risk premium on oil prices. Oil prices are unlikely to reach $100 a barrel in 2024 unless there is a significant geopolitical escalation that results in a significant supply disruption, which is unavoidable. American oil production and exports are rising faster and higher than anticipated, and market sentiment regarding demand is negative, particularly for the first half of 2024. The average U.S. benchmark WTI crude oil price will remain below $80 per barrel in 2024 due to anticipated lackluster global economic growth, according per the results of the monthly Reuters poll conducted at the end of December. Analysts' expectations for 2024 were revised downward from the previous month. The average price of a barrel of Brent crude is currently anticipated to be $82.56, down from the consensus estimate of $84.43 in the November survey. Just one respondent out of 34 in the December Reuters poll predicted that the average price of Brent crude would surpass $90 per barrel by 2024. And that's it. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.